Yo, what's up? How's everybody doing? Let's do a little market update. Update time right now. So, how about that oil down to 49? We are short from $54. I'm talking about subscribers to MMT Trader. And that was all a completely, totally accurate reading of the fundamentals. I talked about the high levels of supplies, but not just that. I've been talking about the collapse in demand. You saw it in gasoline demand. You saw it in refinery inputs of crude. You saw it in crude imports. You even saw it in crude exports, which were falling, which shows that the foreign sector demand is also going down. So I am not covering that position. I am not in a rush to cover that position simply because just looking at the open positions, the open interest in crude, I checked it as of last night. We actually saw a 60,000, nearly a 60,000 increase in open interest compared to last Tuesday. So there has been no net liquidation so far. So I mean, we could really get a washout here. We could really get a washout because there are members of OPEC who are cheating. Kuwait was bragging about the fact that it's at record high output right now. It is exceeding its quota. And there was some comments from Saudi Arabia, I think last week, saying, hey, look, everybody's got to stick to their quota. Otherwise, this thing is not happening. Okay, so big time, big time. So we are short from 54. That's a $5,000 per contract profit on that position. All right, what else? Looking at the stock market, holding in here a little bit today. I'm wondering how long it'll hold if we continue to see weakness in oil. Remember, weakness in oil was a negative factor for stocks and for the economy in general last year, early last year, when oil prices were coming down. We saw the stock market in tandem follow those oil prices down. Because why? The U.S. is a gigantic energy producer. Okay, you get falling prices. That depresses investment in the sector. It calls into question the bank loans. I mean, the whole thing is all wrapped up with the energy sector. Not the whole thing, but it's a big gigantic part of the S&P 500, okay, energy companies. So you have that. Weekly initial unemployment claims up 20,000 in the latest week to 443. That's still low historically, but it came off an extreme low of 223, which is like the lowest in 50 years or something like that. So 443. I don't really see any indication in unemployment benefits trends, the benefits being paid out of any, weakness in the labor market. I think tomorrow's number is going to be on the high side. I don't know what they're but just looking for. But if you just think about yesterday's ADP report, 298,000, probably going to get a strong number. That pretty much is going to solidify a Fed rate hike next week. I've been talking about the growth now in the first quarter down to 1.3% as per the Atlanta Fed's GDP Now prediction indicator, 1.3%. And I'm telling you, it could end up being flat growth. It could end up being negative. If we go down in the stock market in March, and again, you got the debt ceiling thing that has to be done. If we go down and people starting to wonder about, hey, when is this stimulus going to happen, right? The tax cuts, all this stuff getting pushed way back. Now Congress is dealing with Obamacare, the repeal and replace. This first draft from the House of Representatives, that's meeting a lot of opposition, not just from the Democrats, but from the Republicans. And it does not look like it's going to pass the Senate. So it's going to have to be worked on. So all this stuff, the tax cuts, the infrastructure that gets pushed back, that gets way pushed back. All right. So, people are going to start to think about, hey, the market ran up here. We ran up on this prospect of this big tax cut deal and the infrastructure spending, which I've been saying all along. I mean, even if that stuff happens, I broke it down for you. The whole thing looks spending neutral to me, spending neutral. And I'll tell you something on this Obamacare, on this House health care bill. The reason why it's facing opposition from Republicans, never mind Democrats, of course they're going to oppose it. But the reason why it's facing opposition from Republicans is that the conservative bloc within the Republican Party, they feel like it's a money giveaway, even though it eliminates subsidies. It gives people tax credits. So the final bill, in my opinion, whatever is going to be passed, if one is in fact going to be passed, it's going to have much lower levels of government support, whether that's in the form of tax cuts or subsidy, much lower. So that's going to affect the fiscal flows, which are flat. Nothing, no growth in the fiscal flows. So that's basically where we stand. As far as the currency markets, Forex, yeah, they're buying the dollar, they're selling gold. Oh, that's the other thing I wanted to talk about, gold, right? So we've had maybe a $60 correction, last Tuesday, not this Tuesday, the Tuesday before, we got up to like 1263 in gold. We're down to 1202, 1203. So let's call it a $60 correction. Gold, unlike crude, where we have seen no liquidation at all, in fact, more positions coming into the market on this sell-off, the gold has already lost 20,000 contracts in open interest. So I suspect a lot of that long position, and let's face it, that spec long position wasn't very big. What was it, 130,000? Not even half of what it was last August when it was 200, or last July when it was 297,000. But 20,000 decline in open interest since last Tuesday. So everybody who bought from 1234 up to 1263, they're getting flushed out. They've been flushed right down the toilet bowl. They've been flushed. So that's good. That's a technically positive thing. And I'm telling you, if the market goes down, if the economy goes in a recession, all that money that went into stocks, it's going to want to find a home, and it's going to go into gold. And it's also going to, it might flow somewhat into treasuries, but we got to see. I mean, remember, these rate hikes, they're price increases. So you're maybe not going to get rid of the inflation. You could have a stagflation scenario. I was the first guy who said that. Now you're starting to see that pop up. You could have a stagflation scenario where you have low growth or even negative growth and prices remaining high because every time they set the rate up, it's a price increase. All right, so that's how it looks to me right now. We'll see how it looks 10 minutes from now. All right, everybody. See you later. Bye. Woo.